this amazingly resilient rally, hitting new records yet again today. For how long it can last, we welcome in our all-star panel, CNBC contributor, Trivariate Research's Adam Parker, New York Life's Lauren Goodwin, Merrill and Bank of America Private Bank's Chris Hyzy. It is great to have everybody with us. The story seems to me, Adam, that we tried to close above 6,800 and we finally got there like a day ago. And now we could close above 6,900 today.
Trying to figure out why NVIDIA and Microsoft invest in every company except for Trivariate. Can we hook that up? Can we get a little extra, couple billion extra on the valuation?
Got to sell it harder,
yeah,
man.
what's going on here? Look, I did this risk dinner last week with a bunch of people whose jobs it is to manage and position for risk. And I couldn't get anyone to come up with a near-term negative, view. It's just the pillars of this sort of dream of AI productivity and the dove skew to the Fed. And it's like anything that's run into those pillars just kind of falls on the ground. So people are worried about a bunch of things, but they don't think.
What? Like, what are even the things that they're worried about?
Maybe there's some problem with the jobs data. Like, anything that you throw out, I tried to throw everything, and everything just fell on the ground. And the fact of the matter is, S&P earnings are higher now than they were 4 months ago, both for this year and next year. And I think people are expecting a pretty good earnings season. As you mentioned, we got 5 Mag 7 and Visa and MasterCard. We got a bunch of stuff coming. So I think people's view is we end higher, and their only concern is, am I just a giant AI factor bet in my book? And how do I, kind of diversify from that just in case we get, kind of a nasty rotation at some point?
Yeah, 300 or so S&P points ago, Tom Lee was with me. He's like, we could go to 7,000 before the end of the year, easy. And I was like, really? And now he's sitting back and saying, yes, Scott. Yeah. I told you and I told everybody else, because the things that Adam said, there's so many perceived positives behind this market. It's hard to get in the way of that.
That's right. And one that I'd add to the list is that even if we saw a pullback in liquidity, which I don't think is likely, even if we saw a spook in AI, which I don't think is likely, we have a fiscal backdrop that wants to see growth, that wants to see rates lower. And it's hard to handicap that. It's hard to say that that's going to do anything to get in the way of this market, do anything but put a tailwind on this market. Now, I think that the calculus of market enthusiasm, the liquidity that we're seeing, the benign inflation, no real concerns about the consumer, that can turn in the new year. But I don't think there's anything other than the earnings this week that could get in the way of a market rally through the end of the year.
Basically 2.5 months to go. Is there anything that gets in the way of this?
Well, I think we get in our own way half the time. Adam talked about nobody's really looking at things that aren't so positive. I'm not going to take the full other side of that, Adam, but I'll say that every single conversation I have is X, Y, or Z in a bubble. They're still on guard. So you can climb this wall of worry that's in the head.
For a long time.
For a long time. And as long as the fundamentals that Lauren said about profits continue to surprise to the upside, then the on-guard nature is just in the mind, but not actually in allocating capital.
All you need is